Okay, let's look at the third type of technical indicator, relative strength. Now, if you notice the MACD and the relative strength, these are indicators that we draw below a chart as against an overlay, which is drawn into the chart itself of where the price is. That's the difference between the type of indicator we have. Now, the RSI, or the relative strength index, is also a momentum indicator. However, it works differently. It is also known as an oscillator, because I don't know if you've ever seen a heart rate machine. It bounces to and fro a set range. It goes up and down just to show you how wild your heartbeat is. But the upper boundary and the lower boundaries have a fixed range. And so does the RSI. Its range is from 0 up to 100. Now, here's what that RSI looks like. That's this chart that you see here in the bottom. Okay. Now, in this particular chart, you have two lines that are drawn along your RSI, this one in red and this one in blue. Again, certain charting programs may draw those horizontal lines in different colors. So just remember the upper boundary line, which is normally drawn either in a 70% zone or 80% zone, and the lower boundary line, which is drawn either in a 30% or 20% zone. And this is how I'm going to show you how to be able to use this. All right, so we have a price trend going up here. Here's your main trend line climbing. Now, every once in a while, you have this uptrend showing some cascade in price, and let's try to analyze why. You see a strong rebound coming in here, and after a very, very nice pickup in price. Let's look at the RSI. Here's the RSI, and you can see in this stage here, it crosses above this 70% zone, and you can see that it's now shaded in red, and that tells you there's an overbought condition in the stock as of current. And that overbought condition means that stock went up too much too soon, and it might create some degree of profit-taking problem soon. And sure enough, look what happens. The price eventually goes sideways and turns back down, lands back to the trend line, and it's in the trend line where there is bigger support and a rebound takes place. So what should I have done here? So in a case like this, I'd be looking to buy and hold the position. And as prices seem to be going through an overbought condition, you are to stop your buying. If you want to take some profits here, fine, but maybe you should take 10, 20% or 30% of your position. You should still hold your stock because generally this is still an uptrend. Although the stock price could pull back, remember, it could actually just go sideways and not actually go all the way back down to the trend line. So in a case like that, you want to maintain a core position in your strategy, and a trading position you will take profits off when you see overbought conditions inside. But please, in an overbought condition, all buying stops. You should be buying only when it's no longer overbought, and preferably when prices are bouncing over your support. Okay, second situation, it rebounds, goes all the way back up here. You notice your RSI flags you again, second time, overbought again because it crosses over the 70% zone. Look what happens to the price. After it climbs, it struggles, it goes sideways. Now eventually it climbs up again, but it took time to be able to do that. It took almost a month to be able to consolidate before continuing. Again, it moves up, hits the upper boundary of the range, and starts to pull back. Only in this time, it did not hit the overbought condition, and I'll explain to you why in this case it did not. The reason for that is because it took a lengthy consolidation time here and allowed the stock to rewind. And this means that because of this wind up, this could actually have passed this even a little bit more before going into an overbought situation. But it followed the rules nevertheless, and eventually it backed back off, prices fell back down. So anytime this is not in an overbought condition, that should contribute to the fact that you can look for an opportunity to buy there. But again, the perfect scenario here is wait for prices to come closer to your support area, and these are better areas for you to buy rather than closer to the upper boundary of the line. Then here we have another move. This time it moves quite strongly all the way back up. RSI shows you another overbought reading, and after that, prices make a reaction once again. So you can clearly see the advantage of understanding where is this overbought threshold. Because when you see this overbought threshold, it wants you right away. Stop your buying. You might even think about doing some selling, but keep your core position intact. The only time your core position should be sold is when this major uptrend line here is broken, and you see a warning that tells you a change in trend has taken place. Other than that, keep it very much in hold, and just use maybe up to 10-30% of your position to take profits into these high band areas there. Now, these areas are example of overbought conditions, and overbought conditions should only be looked for when you are in an uptrend. In a downtrend, you will rarely, if ever, see an overbought situation because they will not go overbought in a declining trend. In a declining trend, you will see an oversold situation. So in an oversold market, what you're supposed to be doing there is looking for an opportunity to sell, not an opportunity to buy, because you're in a downtrending environment. However, if you see a stock plunge and it falls into an oversold state, you should stop selling a position that you still have, assuming you're wanting to sell it, and you should wait instead for a major rally to come out to bring it out of an oversold state and sell it once it's no longer oversold. And that's how you're supposed to use an overbought and oversold system. Now, the RSI has a magic ability. I didn't just place it here for that to tell you overbought and oversold. You can probably get that feel or a hang of it eventually over time. But you see, the RSI has another hidden substance inside it. It has this new thing called divergence. Now, divergence is simply a lapse in the market strength that we want to be able to pick out. And I'll show you an example of how to be able to look for such divergence so it can help you sometimes when you spot it out appropriately. Now, divergence is a lapse in strength, as it says here, or weakness, and it's shown by showing you a signal in the RSI, either in its tops or bottoms, as you compare it against the tops and bottoms of the price of the stock. So let's have a look here. So here we have an uptrending situation, and let me try to identify what that divergence looks like. Here you see an uptrend. Here is a Boyte's power going to this high, corrects for a while, rallies back and makes a new high, and only to find out that prices are correcting once again. Now, that's normal, nothing too adversely impactful of something like this. But let's look at the RSI now. Here's your RSI. Did it hit an overbought reading when this went up? Yes, it did. Now, the next time it climbed up and went to a new high, even with a forceful move, let's see what the RSI did at that time. If you notice the RSI here, it climbed up to here. It didn't even go to an overbought territory. In fact, the high that you see here is actually lower than the high that it met out in the first condition. This is known as divergence. When you see a higher high in your price, just like this, and you don't see a higher high or the same high in your RSI, that tells you that momentum, upward momentum, has shown a lapse in its strength and that a potential wider correction may be coming in place. Look what happened to this after this divergence had taken place. You see, what happened to a Boyte's power is it went right through the floor and fell down quite horrendously. And there's no way to predict that. Maybe if you had an MACD, you probably would get a good reading. But if you were just using this alone, that wouldn't have helped you. But look at the RSI, giving you what is known as a bearish divergence, alerting you that a potential wider reaction is about to come. And sure enough, it did this. If you were able to see the signal earlier on when it was here, you could have saved a lot of money instead of riding this through all the way back down. Now let's give you another example of that different types of divergence. This is known as bearish divergence because what it does is it announces a bearish swing. Here we're going to give you an example of a bullish divergence. This is ICTSI. Here we have a downtrend, and you can see a downtrend here, technical recovery, falls back down and makes a lower low. Again, low, lower low. So let's just connect these two together. And now let's look at the RSI. So the RSI did generate an oversold condition as it did here. Rallied back, it also hit an oversold condition, but look at what happened. Here we have price going from a low to a lower low. Here we now have the RSI bottom, finding an RSI bottom which is higher than the previous one. This is called bullish divergence. What that means is that it's telling you that the seller who's selling this is running out of steam, and that more likely a major market rally could be up forward here. And so if you get an announcement like that, it could say, prepare for a major rally coming inside. You could now look for potential positioning over here given this condition. Let's see what happened after this bullish divergence taken place. So you can see a very forceful advance had taken place in ICT. And this was alerted way in advance, predicted by the bullish divergence that you've seen here. So this is why we look at the RSI. One, to give us an overbought and oversold condition, and second, to give us the notion of divergence to be able to help us out in spotting major market tops or major market bottoms. And this becomes very useful when you plug them into conditions like this, so I can make a good clear hand of what trend assessments are taking place. All right, let's now try to be able to look at an example of how to be able to plot out the RSI in our charting app. All right, today's example, we're going to study east-west. Now, we do have, of course, an uptrend floating right here. Okay, and now let's try to be able to make an assessment by looking at the RSI indicator. All right, so RSI, we find it here. Just leave everything as is except for this. I'm going to change this instead of 80% to 70%. On the bottom, I will make 30%. I will change the color. I will make the top overbought red and the oversold, I'll make it blue so you guys can see it. So here we have it in the bottom. This is the RSI. We'll just widen this. Okay. Now you can see, I will just draw a trend line here so we can help us make an assessment of the trend condition. All right. Now if you see here, very, very strong rush in prices leading up to an overbought condition. Also here, after rushing up in July, strong overbought conditions. And look what happens to the price after the overbought condition. It generates a consolidating band for prices to be able to go back to the trend line and then explode, and then overbought again, cascade down into a corrective element. So here you can see how the overbought element works. Now let's move over in time. Now I'll just expand this a bit as the trend continues. Okay, let's look at this high and draw a line to the higher high, which we see here. And let's look at your RSI compared to the next one here. And you can clearly see this is a lower high. And so that tells me, alert, alert, wider correction may be coming in view here. And if you notice, it did pull back. It broke through the trend line. And look what just happened. And to continue the story, after it fell, it went to an oversold condition, as you see here. Oversold means it needs to rebound for a time, and sure enough, a rebound took place and climbed back up to the high, at least this area here towards the closer to 1330 or 1340. So again, what do I do down here in an oversold condition? I will stop my selling and I will renew my selling only if this comes up to the next resistance, maybe closer to the breakdown zone here. And this area might be a better area to sell rather than this oversold condition that you have. So in this chart, I showed you how to be able to draw the RSI. You used your trend line to help make an assessment. We've noted the divergence that came in that alerted of a wider correction that's taking place. And so it can prove very useful for us to make an assessment of a trend condition, whether it's too much or let's say it's fallen down too much or gone up too much, and what divergence can offer up some potential corrective situation into the market.